All right, what is up, YouTube? We are back with another great day of trading and investing. So, I'm going to update you with the performance of my portfolio, what I've bought and what I've shorted so far. And we're just going to talk about a couple growth stocks I think that might have poised to, just keep running up, or some that might even double this year. And we're just going to talk about a couple of those. So, I have the Berkshire Hathaway. Like I said, I lighten up my position. I have gold. Remember, we're shorting gold because once it get past 1300, we start to see how it started to bang against those resistance levels, and we can check out we can check on those. Let's say DGLD, showing that we're getting out of that oversold level. Now we're starting to see a little momentum up to the upside, and we can also look at the gold contract to see if that holds true. And as you see, gold is falling, so that means that DGLD is doing its job and going back up, counteracting, that fall. So we're up about 2% for the day on gold, or shorting gold. And right now we're down on DWT. Right now, oil is not giving up. Oil, I would say it's above 62, almost mid 62-ish right now. This is simulate trading, so it is kind of delayed. So I would say mid 62-ish where it's trading at right now. And right now it's just looking like it might break out even higher. If it breaks out even higher, I might buy some more to keep shorting, because like I said, the momentum is getting, it's getting way overbought. And whenever we get a way overbought, of course people are going to buy because they think it's going to break out. But once people wake up, they see that gold is definitely overbought. They're going to go ahead and lighten up their positions. And once we get the oil inventory and we start to see how many oil spigots they start to put back online, this will bring oil right back down. Maybe I would say all the way to $60, or maybe even below $60. So I'm looking for oil to go back down just to 60. That's my price target for short term on oil from shorting it. So I'm probably seeing about maybe oil going down from here about $2. And then if it breaks even below that, we might even add more to the position, because like I said, the daily moving average points for this thing to be at $6.11. Of course, it moved up a couple of cents because because the daily moving average just gives you the average. And of course, if the stock trades higher, higher than daily moving average, of course, it's going to go higher. So like I said, the momentum is showing that it's overbought. And whenever we get an overbought position in these commodity spaces, we want to look towards capitalizing on that position. So that's why I'm trying to get towards the bearish side of oil. I was surprised that I was able to predict oil to go to $60 at the end of the year, because a lot of people say it is really hard to predict where oil prices are going. But I was spot on predicting where oil is going. I don't expect my spike or my price target to be accurate on oil, but I see oil maybe going to $80, depending on if we're able to get oil producers to actually cooperate and stop cutting on the spigot, and stop, I would say stop being so greedy to where, we have to push out so much inventory and forget about the inventory that we have in the back room. So that's just the oil spill, the oil spill that I have for right now. For our oil short position, we are winning. We're up about $180 so far for our short position. On oil, we're down about $380. Of course, that is a huge loss, but as you see, we're working with an account balance over $200,000. Remember, we started with $200,000. Now we're at $204. Our profit right here is about $5,700. Of course, we have lost some money, and that is because of the unrealized gains that we do have here. So I'm going to stick with shorting oil just because on the basis of the technical analysis, and I'm not sure if oil can keep breaking out to all-time highs. I don't see anything bullish in that space just yet. But let's go down to Starbucks. Of course, we sold majority of our Starbucks, so we were able to capitalize on that position of Starbucks and close out majority of our shares. Now we have TVIX. We're negative on the TVIX. Remember, like I said, the market is heavily overbought, and we can check out pretty much all the market index ETFs. We see Dow Jones overbought, S&P 500 way overbought. We go to triple Qs way overbought. So right now we have to come to a period to where everybody takes a break and starts to, basically we have to get to one of those sell-off periods to where stocks are selling off. Nobody really sold their stocks last year. That's why you kind of see the market kind of run up, and there was not really a big sell-off going on because they're typically just letting the money ride. So I'm not really sure what event we will have to let people, stop letting money ride, just go ahead and take their money out. So at some point in time, we're going to see people start to sell these stocks off. There's not going to be a point in time where we're going to see this, where we're going to keep seeing growth like this, where, we're heavily overbought and just keep running up. At some point, the stocks will have to fall back down to get a resting period like they always do. Like they always do. And, we're just going to have to capitalize on the discounted stocks. So, like I said, I was going to talk about the discounted stocks that I see right now, all-time highs for Caterpillar. I'm not really sure what price to buy that at because right now we see how parabolic this thing has gotten. Ever since the IRS, or not the IRS, I think it was the SEC or somebody came in, busted into our office. That's when you seen the stock kind of sell off. I made a video about Caterpillar. I wasn't really expecting this stock to almost double ever since that did happen. But as you see, it's pretty much got parabolic. And as you see, overbought, momentum ride. People are letting the money ride for Caterpillar. There's no real sell-off going on in Caterpillar. And as you see, daily moving average act as support. So we see some strong growth from Caterpillar. So what I'm thinking here is that Caterpillar has to come out with an amazing quarterly report to keep this thing to keep running up. But I might be a buyer of Caterpillar whenever we get a sell-off, or if I'm able to look at the earnings transcript, when we do come out with new earnings. So pretty much what you're seeing right here from the market is that everybody is getting optimistic about earnings. We want to see growth. We want to let our money rise. So people are going to be adding more to the stock market. And this is what people want to see. They want to see companies grow. They want to see charts like this for their investments. I know last year was definitely a unusual year because we just kept seeing stocks run up day after day. Some stocks even tripled in value. Some even went up 1,000%. And we're just not talking about cryptocurrencies here. So there was definitely a lot of growth. There's a lot of optimism in the market for a lot of people to actually buy more stock. So I just wouldn't suggest buying Caterpillar at an all-time high. Of course, it did see strong support at that daily moving average, but at some point in time, Caterpillar has to fall back down for me to get comfortable. And as you see, the buyers are just way too high. Momentum is way too out of whack. So we have to see some kind of sell-off at some point in time for me to actually, feel comfortable with this. And what makes me feel even more comfortable that we will see one once we do get it is that Caterpillar actually gapped up right here. So whenever we get companies when they start to show that gapping period, so we will see Caterpillar kind of gap back down. And once Caterpillar, like I said, remember, quote me on this, once Caterpillar gaps down, we will see strong sales to the downside whenever this company does not perform to what shareholders are wanting. This stock will gap back down. And once it gaps down, this will be an opportunity for people to actually buy into the stock. I'm not sure how far the gap down will be, but at some point, Caterpillar will gap down. And once it gaps down, this will be a perfect opportunity for anybody who wanted shares to get into Caterpillar. Like me, I want shares in Caterpillar. I'm going to wait till this stock gaps down because remember, this stock gapped up on an earnings report. So I'm not really sure if it's going to keep gapping up already on strong momentum. Of course, people are going to want the stock to go up, and people are already, I guess, some sort of, I would say, factoring in a really good earnings report. And if that doesn't happen for Caterpillar, this stock will fall back down. Also, Take-Two, like I said, the video game stocks, they trade in tandem. Remember, this stock was almost at 120 just a couple of hours ago. Now the stock is definitely falling down to the downside. Remember, I talked about those all-time highs, support and resistance levels. So now we're trading in a range right here. So at some point in time, they're going to have to show some sort of bullish quarterly report. Of course, the video game makers are showing all signs of bullish momentum, but they do trade in lockstep with each other. So unfortunately, EA Sports is going to bring down the rest of the video game makers. So we see Activision Blizzard sort of following that same momentum path as you see right here. Bringing down EA Sports will be, I would say EA Sports is the only video game maker that is showing kind of stagnant growth to where the video games that they're making are not, up to par like the Activision Blizzards with the Call of Duty, to where people want to stay on the game all the time, or Take Two, where people playing Grand Theft Auto, and 2K, where video game competition, the video game sports, or the esports league, is starting to be really big, and Activision Blizzard and Take Two Interactive are sort of capitalizing on that very big. And EA Sports not so much, because like I said, they did have problems with that Battleship, whatever it was, the Star Wars game they did put out. They did have a lot of problems with that. So that's the only video game maker that kind of lags in this space and kind of brings down the rest of the video game makers. So whenever we get, like, maybe we get an EA Sports sell-off, if we get an EA Sports sell-off on their type of news, I doubt that you see, the Activision Blizzard and Take-Two Interactive sort of follow in lockstep with that. But if we do see some sort of video game maker sell-off, I suggest getting maybe Activision Blizzard and Take-Two Interactive, because we do see the chart and we see how much they've grown. So Activision Blizzard all the way to 37 to 67, Take-Two Interactive all the way to 49 to 120, and EA Sports 77 all the way to 111. Not so much as as the growth that we've seen, but like I said, I gave you a little backstory. We see that those video game makers, the E League, is starting to be very good with capitalizing on that online market. So we have Caterpillar, we have the video game makers, but right now I'm just waiting for something to happen in the market for me to actually get bullish on a couple other stocks. So we see Square is starting to take off. We're about 1%. It kind of worries me a little bit on Square, because it is sort of tied a little bit into Bitcoin. And what kind of worries me is that I understand how much of the percentage of Bitcoin is tied to Square, which is completely none. You won't start to see Bitcoin start to show up in their revenue until a couple years after. But it's they're testing Bitcoin, so their Bitcoin exchanges are just a beta phase. So it's kind of limited to Bitcoin, but at the same time, when you get people that don't read, they read headlines first, they're going to go ahead and buy Square just because they hear the word Bitcoin, rather than actually reading into that report and understanding how tied up in Bitcoin is Square. So that's the only thing that kind of worries me, because sellers, we see from 49, it goes back down to just about $34, $35. So we were seeing the, amazing growth. We were almost seeing parabolic growth just about. And then, it kind of topped out. So we kind of disemerge ourselves from, trading in lockstep with Bitcoin. Momentum, you see that little dip. Momentum is definitely pointing back up. So if you were not able to buy Square on a discount, you kind of miss out on that point. So you probably might have to wait till earnings, see how they did on earnings. If they, if they kind of fell on earnings, you might have a chance to get into the stock. But, that's what I'm looking at. Commodities, definitely another company that I do have in my portfolio. So you see, you're able to get down on a support, or you're able to find a discount in the stock if you knew about it when the stock gapped down. But now you see the stock trend back up to $51. So with the chemical companies, I'm starting to get more interested in this space, because I'm able to see a lot of the growth that they do. So 56 all the way to 76 as Dow DuPont. This might be my next target if I do buy a chemical maker or chemical stock. As you see, 76 is definitely way overbought. A lot of those chemical companies, they are taking off. Don't get me wrong, they are taking off. And what's going to happen is that these stocks are probably going to double in value, maybe triple in value. This does happen, because if we go back to Commodities, from 21, but if we go back 3 years ago, this was a spinoff from a company. So from $3 all the way to $58. So this might be a stock that you didn't know about, or a stock they don't talk about much on business news, because they just don't cover, they just don't have enough time to cover those, I would say, enough stocks. They just cover the widely held stocks. But like I said, Caterpillar, Take-Two Interactive, or the video game space is where you're going to get a lot of your growth from, because this is where the growth stages. This is where a lot of those companies, they're capitalizing on those e-leagues, the esports leagues. So What else could we talk about? Like I said, cryptocurrencies aren't really going anywhere. Bitcoin is back below 15,000. Ripple is not really going anywhere, but Ripple is one of the cryptocurrencies that you see financial institutions are actually starting to buy. But I see Visa start to cancel out some of those cryptocurrency cards, which was kind of giving the cryptocurrency market. It was kind of taking away some of the validity that they needed. So Visa actually took that away. Visa might be another stock that you might be looking at if you're looking for growth. We see Visa kind of emerge off the daily moving average, use it as support, bounce even higher. 120 is the all-time high. So if we were able to ever get a discount, or if we're able to get to a sell-off in the market, remember these stocks, they trade in groups. So like I said, with the video game makers, we see MasterCard, Visa, they're all close to an all-time high. PayPal, pretty much they're all close to an all-time high or setting all-time highs. They all trade in lockstep with each other. American Express, they all trade in lockstep with each other. So like I said, when you get a sell-off in this group, you might want to pick and choose which one you want because they are at a discount, or if you want to load up on, or if you want to get payment heavy, or if you want to have a payment type of portfolio where you just load up on payment companies, you're able to do that. So like I said, be aware of how these stocks are trading, because remember, they do trade in lockstep and they do trade in groups with each other. So just because you see the stock selling off, so let's say you might see Square selling off, right? This might open up an opportunity for me to talk about another payment company like a PayPal, maybe, another company. I'll probably bring that company up, but I know that company was low enough. I think it was below $20. It's pretty much in that stage where Square started. And this is a payment company that is in the growth stages as well. So I'll probably get the name of that company next time I do a video, probably tomorrow. And we'll talk about the technical analysis for that video. But like I said, the all-time high for Square is about 49.56. I'm in Square for the long haul, so I'm pretty much an investor of Square. I'm not going to be looking to trade these small moves in the stock. Like I told my friend, you buy the stock when it gets on a discount and you start to load up. You start to load up your position. This is how you get a really good investor. This is how you build your investor strategy. This is how you build your investor mindset. Once you know that the stock is starting to, I would say once you know the stock is starting to produce growth, you have really nothing to worry about unless the stock is like on a losing streak or the stock is having a hard time to produce growth and things like that. But as long as you have stocks that are producing growth, go for it. Bank of America. We see Bank of America at $30. Of course, Bank of America is not at an all-time high, but at the same time, Bank of America is at $30. Once it got past the 25, I knew this was going to 30. So we're going to look for Bank of America to maybe get on a sell-off, and this might be a position that you want to get in on just because of the bank stocks. You might want, or instead of getting the bank stocks, you might want to just get the whole banking sector, the XLF. But what I do to be on the safe side, I go ahead and get the Berkshire Hathaway play. If your account is not able to afford that, of course, you're able to get, the XLF, or you're able to buy the individual companies. But the Berkshire Hathaway is able to give me the airlines, the financials, the oil companies. So pretty much when I buy a share of Berkshire Hathaway, I'm pretty much getting whatever this company is diversified is. It's pretty much a conglomerate. And remember, like I said, videos before, or a couple videos before last year, once we get airlines, once we get financial stocks to start to rally, this is when Berkshire Hathaway starts to wake up and go higher. Of course, you've seen it when the stock bottomed at 180 and bounced even higher to go to $200. So at some point this year, I see Berkshire Hathaway hitting a price target of 240, maybe 220 sometime soon. But 240 is definitely my expectation for Berkshire Hathaway. Of course, that is I would say a overly optimistic price target for Berkshire Hathaway. But as you see the growth, you see a lot of things that's going on with the market. You definitely see, that this is definitely achievable. GE is another old holding that I do have. I was buying it in the 20s, buying it in the 19s, and buying it in the 18s. So GE is another stock that I do hold. I do see this thing going past $20 sometime soon because, like I said, people are going to beat down this stock. Remember, I read the earnings transcript. There was nothing positive in here. There was nothing positive in the earnings transcript. They really couldn't tell you anything positive other than to wait for the for pretty much the announcement of how they're going to pretty much, I guess, revamp the company or turn the company around. And once you got the company turnaround plan, there was still nothing there. So I was pretty much trading off technicals, and I think that GE is definitely going to go up past $20 sometime in the near future. People are using GE as a speculative play now. A lot of young investors around my age group, they started to buy GE on that dip. As you see, 1725 was definitely the bottom in GE. GE definitely set an all-time low for the stock. And we definitely have to pay attention to when stocks set all-time lows and when stocks are definitely at a discount. So right now, GE was trading at 17 times earning right here when it hit $17. That's pretty much where people are seeing the stock at, basically. So right now the stock is trading at $18. So people are seeing this thing at $18 time or 18 times earnings. And people are getting overly optimistic in GE. I'm not really sure, if GE is going to produce this much when it does, or when it's time to produce their quarterly earnings. But it is definitely a good speculative play for people that are looking to grow something, really fast or things like that. But GE is definitely a stock where it doesn't really move, definitely really move that much. But when we get a low price per share and we start to get those moves to the upside, you start to increase your portfolio value, a lot. So, momentum trying to come back into GE. We're starting to see a lot more buy orders in GE. But like I said, we want to pay attention to the stocks that are setting all-time highs. Also, the stocks that are setting all-time lows, because there might be at a discount. There might be a reason that stock is trading at an all-time low. And also, when we do get those quarterly earnings, we want to see what stock is at a discount, so that way we're able to purchase those shares at a discount and then ride the wave when the stock goes back up. So this is nothing but positioning yourself to where you're buying discounted stocks and then go ahead and buying that discounted stock and probably selling that discounted stock once you're comfortable with selling that stock. So like I said, price target for GE is probably going to be past $20 sometime soon. So we're going to see a dip in GE, or the dip in GE has already happened, and we're going to see that thing right back up. At some point, people are going to sell GE right back off. So it's pretty much you have to be careful with buying GE. We see the price target from JP Morgan, GE about $16. So they pretty much see GE at 16 times earnings. They're going to give that reason why and different things like that. So you have to pay attention to the news in the company and also the indicators that you do have. That's pretty much all I have for you guys today. Like I said, the market is definitely getting optimistic on earnings. We want to see a lot of those companies grow. Like I said, the XLU is showing back to being that oversold level. So at some point, this thing will take off. It's just a matter of time to when it actually does take off. Now, I was able to look into, which holdings or which stock is definitely, keeping this thing in the oversold level. And it's pretty much just one stock that's keeping this thing in the oversold level. Once that stock is able to break out of that oversold level, this thing will start to tick back up. GDX, like I said, understand the charts well, and you'll be able to capitalize on all, I would say pretty much on all situations. Like I said, I bought this when it was oversold, sold it when it was overbought, and now you see the stock starting to tick right back down, pretty much reset itself just about. Honeywell will be a stock that I might want to catch on a discount whenever this stock does sell off, or if it does have a sell-off, this might be a stock that I do buy. I know this is one of the I would say this is one of the better competitors of GE. People buy this instead of GE. They a bunch of other companies instead of GE, but pretty much when you're buying GE, you're pretty much taking a chance because of the low price per share. But with Honeywell, it definitely does have growth in this company, and I know they are releasing a new product in 2018, or at least early stages of 2018. You know this if you read the earnings transcript. Pretty much staying in touch with the earnings transcript, you're able to learn a lot of things beforehand, so that way you're able to stay up to date with the company and understand what's really going on here. But that's all, that's all I have for you guys. Comment on the video. Let me know if you want to take a look at any other things. I don't look at penny stocks, unfortunately. I only look at things that's going to grow your account safely and over time. So if you have anything that you want me to take a look at that's going to grow your account safely over time, I'm able to take a look at that on the platform online. So that way we'll understand what's really going on with the stock, or if we need to do some breakdown to see, or technical analysis and different things like that. But pretty much the market, all stocks, or all the growth stocks that pretty much people want to buy, they are pretty much hitting all-time highs or getting close, or falling just a little bit off of that all-time high. So we want to wait for a sell-off. That's pretty much what people are waiting for. And the people that are holding the stock, they're not really selling the stock off to kind of give us that edge on the stock. So it's pretty much just a waiting game to see when investors will kind of sell stocks off. Once people do sell stocks off, they're going to create a discount for you to actually get in and buy, different companies. But those are a couple companies I'm looking at. I'm looking at, like I said, Caterpillar, Activision Blizzard might be a new position for me. Dow DuPont will definitely be a new position for me once we get a sell-off. Expedia was another company that I really wanted to buy when it became oversold. We see 115 and the stock start to dip and take back off again. But Expedia is definitely another company that I've been watching off and on, and it definitely does create a growth opportunity. Like I said, all companies fill gaps. So we have about $16 or maybe $17 of upside of that company. So if you're looking for a speculative play or a stock where you're able to get some money in, you might be able to buy Expedia and go ahead and buy it. But right now, Expedia is definitely in that stages where there's a lot of people buying that stock. They might see the same thing that we're seeing right now, and they're buying the stock. They're hoping that it gets back up to those levels, so that way it can break out and go even higher. But Expedia is definitely one of the stocks that I see probably going up past 160, or maybe hitting back up to that 160 level at the end of the year. So that's all I have for you guys today. I'll be back with more growth videos tomorrow. So take care. And like I said, comment, like the video. Let me know what you thought about the video. Let me know if it was helpful. Let me know if it was insightful to you. Let me know if you learned something that you didn't learn already. So take care, like I said, and I'll be back for more tomorrow.